On the shareholders' equity, oh, we already talked about it. Yeah. There is one thing I want to add here. Typically, you see something like other comprehensive income. And these are certain items that are technically income, but they're not recognized as income in the income statement. One of them is uh, suppose we have a Japanese subsidiary, and because of consolidation, I have to convert their balance sheets, which are in yen terms, into dollars. Let's say this company was worth 140 billion yen last year, and dollar yen was 140. And that means when you convert it to dollars, it was worth 100 $1 billion. But this year, nothing changed in the company. In yen terms, it is still worth 140, but dollar yen is now, let's call it 154. So it's about 10% higher. So if I did 140, well, that's now equal to about $909 million. On paper, there is a loss of $91 million. We never put that into income statement as a loss, but it's part of other comprehensive income, things like foreign currency translation. Sometimes if you have contingent liabilities and values of those change, especially derivative securities, uh, accounting for derivative securities is a very long stuff, but some of them, even though you don't mark them to market, you also recognize the changes in the value and you put it in other comprehensive income. Let me briefly start the income statement. We start with revenues, and revenues are recognized based on recognition principle. It basically says that sales process is complete, which means there's a contract. Value of sales can be ascertained. You know it's going to be $100. Receipt of value is also ascertained or very likely. And goods, services are shipped. So we don't wait for the actual cash to hit the company's bank account to recognize that as a sale. So if my customer says, okay, ship the stuff to me, I'll pay you in 3 months, that's a sale. As long as you have the confidence that they'll pay you. If you don't, you're not going to do that sale anyway, right? Sometimes, they return it. Every once in a while, you see gross revenues, net revenues. Net revenues are sales that are net of any returns or discounts you may have had. Then you look at cost of revenue, also known as cost of goods sold, the COGS. or COG. And here we use the matching principle. By the way, cost of goods sold are not all the expenses the company makes. These are costs companies incur directly to produce the goods and services. You produce a car, what are the inputs? You pay for the raw materials, spare parts, any other stuff, electricity used during the production, the wages you pay to the workers, any pension fund they may or may not have, or healthcare, what have you. These are expenses that you incur in order to produce that revenue. Certain things do not contribute to cost of goods sold. NVIDIA CEO makes a certain amount of money, right? I don't think the dollar amount is that much, but he gets a lot of options. For example, I don't know about this CEO, but the previous CEO of Google's annual salary was $1, Eric Schmidt. But that guy is probably worth over $20 billion now. Why? Because he was always paid in Google stock options. And as Google stock goes up, those options are more valuable, yada, yada, yada. Same thing with Elon Musk. His actual salary is not much, but the guy is worth over $100 billion. And you match these to the cost, to the revenue, also in that period. Okay. So if I'm doing quarterly sales, I'm going to look at the expenses that I made in that quarter only. There are certain things that you have a headquarters building and you pay a rent. That's not part of cost of goods sold. Because whether you produce 0 cars or 100 cars, you're going to pay exactly the same amount. When you're doing financial accounting, you don't worry about that stuff because there are those little people that we call cost accounting people, which are actually the smarter and more important accountant people because they know about economics when they do accounting. Cost accounting people tells you what those are, and you just put them in. The difference between the two, we call it gross profit, revenue minus cost of goods sold. Sometimes we express it as a margin, the so-called gross margin. Basically, that's gross profit as a percentage of the revenues. For example, let's look at what that number was for Google in their last 12 months. Income statement, come on, quarterly. They made sales of 328 billion. Cost of revenue was 140, and gross profit is 188. So 188, 261 divided by 328, 284. That's 57% gross margin. That means out of every $100 that comes into Google, 43 is for just cost of producing that revenue, and 57 is kept to finance other things and as income. Then we look at things like operating expense. These are expenses that are made in order this firm to operate its business. You have overheads, you have salespeople, they do sales calls, you have advertising, even R&D is part of that. And you have operating expenses and operating margin. So let's look at their operating income. That's the operating income divided by total revenues, operating margin. 97,937 divided by, that's almost 30 cents. Okay. So for every dollar of revenue that comes in, and after spending money to generate that revenue, paying for the overhead, R&D, Google still keeps $30. Now, these tell different stories. The first one tells me essentially, A, how good am I to produce the revenues? And B, if my gross margin, for example, improves over time, that means I'm maintaining my pricing power. Let's look at the, let's do it annual. Let's look at the number for 2021. 146,698. Oh, about the same. So it looks like Google is actually doing a good job to, keep their costs same. Uh, Operating expense kind of tells you how much money you're spending on overhead and stuff. If that thing goes up over time, as the chief operating officer, I need to worry about that. Maybe I need to replace people. Let's stop here for today. Remember, think about your groups, because Tuesday we're going to finish chapter 2. We're going to wrap up income statement and do the cash flow stuff. And not next Thursday, but the Tuesday after, we're going to play Jeopardy on chapter 2. All right? And homework assignment will be assigned next Wednesday, pretty much. So I need to know your groups by then.